and we saw some December action. Actually, if we back up a little bit, September, October, and December, we've seen a pretty flat market. This is coming after a rally since July, actually. Okay, so just a popping it up out to the daily chart for a quick look, and then I'm going to come back to the hour chart here. Okay, so this week so far we had this sort of pre FOMC drift. Okay, basically, before the FOMC, we had a risk-on rally seen across the currency market, seen in the S&P 500. For the euro dollar, we rallied from around the 1.2880 pivot. You saw this previous support pivot as well. And we saw the market supported there and come up here in somewhat of a channel. Now, after the FOMC statement, we had another push. Actually, that was here. This was the FOMC statement right here. We had a push. But then we hit resistance just under 131 when Bernanke took the mic for his press conference, and we saw the market consolidate since. We had another Asian session push, still failed to break 131, slightly higher, but what we saw was a bearish divergence with the RSI, and we saw that resolve during the European session. Okay, and then we're here in the U.S. session, where earlier this was basically either a double top or an expanded flat, right? If it's a double top, I would like to see it, close below these lows here. It didn't do that. It had some, tails showing rejection down there, showing demand down there and support. So the double top wasn't really convincing at the moment. I wanted to wait for it to come up to, well, at least break down this channel also to give me a more convincing topping action. Okay, but while we didn't have that, we saw the market come up here, and I felt like if we go down to the 15-minute chart, I felt like we had a sort of central pivot around this 1.3075, 1.3078 area here. I noted that if this was going to hold, we still have a chance for the double top. But with the break of this, the structure of this no longer looks like a double top, and it is more likely that it's an expanded flat. Now, what does that mean? Expanded flat, it just means it's consolidating. And since we have a bullish trend before that entering this consolidation, that means this is a flat to bullish market in the very short term. Now, back to the 1 hour chart. Okay, what we have here is sort of some beginning bullish momentum. When you see the RSI push above 70 like this, in the very near term, maybe that means it's a little bit overbought. But when you look at it from a higher degree, a higher time frame, this actually gives you an idea that, hey, the market might be bullish, especially if the RSI is able to hold above 40, preferably above 50. But as long as it holds above 40 and then comes back up above 60, it shows you bullish continuation momentum. Okay, and that's what we have right now. The market might get a little choppy up here, but it's still bullish. Okay, as far as momentum goes, as far as structure goes, and even price action. Even though this low is lower than this previous low, it's still making higher lows and higher highs. So euro dollar still bullish in the short term, and if it extends, what are we looking at? If it does extend, let's go back to the daily chart, and this is where we start looking at this in a higher degree than your intraday charts. Okay, what we have is some resistance here, 1.3170, 1.3150 area, our August, or actually September high here. I think once we clear that, we basically clear this period of consolidation, period of sideways action. Okay, and with that, we could be opening up the 2012 highs at 1.3487. Okay, so that is the anticipation here with the break. Okay, it hasn't broken yet, so we can't say it. I can't say that yet, but that is sort of my bias as well. I do have a slightly bullish bias on the euro dollar at the moment, and if it breaks 130.170, I'm looking at 1.3480 area. Okay, you can expect some choppiness here. I'm not thinking it's going to go straight up. There has been a lot of choppiness around this area, around the 1.32 area, even earlier this year. So it wouldn't surprise me if we chop up this area. We see a battle here, and then if it breaks, maybe the initial break above 1.3170 isn't going to be the signal. Maybe after that break, we get some kind of consolidation in this area, and as long as it holds above, in my opinion, as long as it holds above 1.30, the market is focused on to the upside. Okay, so the other side of this is if the market breaks back down below 1.30, we are expecting further consolidation, and but no bearish outlook until we anchor out of this trend line, and really for me breaking back below 1.28 might give me a bearish outlook. Okay, otherwise this is just a consolidation area where I have slightly bullish outlook, sideways to bullish outlook. Okay.